Hey, folks. Welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, May 13th, 2010. Well, folks, the markets are essentially unchanged today. After a little bit of whipsaw, we saw the markets gapping lower today, then rallying to the upside, then turning around and going back towards the lows, and slowly in light volume this afternoon, they have made their way back to the flat line on the day. The Dow right now is up 1.5 points on the day. NASDAQ is still down about 6.5, and the S&P 500 is down about half a point on the current time frame in the charts. Now, a couple things to go over here. Let's discuss first what's going on in the markets today. What news did we see out? Then we're going to cover the charts and take care of everything else. Number one, we have the big webinar coming up this weekend with the methodology where we're going to reveal some of our time counts that, again, are all proprietary. That will be a very, very big thing. Again, a big event coming this Saturday. You can find that on the website, inthemoneystocks.com, going under seminars, webinars, and education link. All right. Now, going back to what we saw this morning. So far, as you can see, the market's been choppy with a sideways kind of angle to it. Overall, as I mentioned, the markets are flat. The key here today, folks, you have to think about jobless claims. Number one, the euro, the pound, the dollar, those are always in play, but we did get jobless claims this morning. The jobless claims coming in a little worse than expected. Overall, people had hoped for a little bit of a better number, somewhere in the 425,000 range. It came in just around 444 today, right between 440 and 450,000 on the overall week or from last week. Now, overall, we've seen the jobless claims hover in this range, and that's not a good thing, folks. I mean, we're trying to look for any little signal that could be showing us job growth or a slowing of layoffs, and we're not seeing it. We've been stuck in this 450,000 range, really, in all fairness, since late last year of 2009. And until you see that big kind of push up where we get to 425, 415, 405, 395, I think the markets, again, are going to have a little trouble understanding if we're truly out of this mess or if we're kind of just hovering right in it still. All right, so that's number one. Markets were a little upset at that number. Initially, before that number came out, the futures were trading up about 2 to 3 points on the morning session. As soon as that happened, they dropped about 2 to 3 points to the downside, so a swing of about 6 points in total on the S&P futures. Now, as you can see, that caused that little bit of a gap down. The markets did surge back. We came up nicely to yesterday's double top. As you can see, notice again, yesterday's high of the day was at 117.62. Today, high of the day, 117.68, piercing that on 2 consecutive candles. It could not break through. Obviously, you need to be understanding that that's the shorting opportunity. Understand that, folks. When you get a double top from yesterday, you can short that, as was called out per the chat room, to go short here, and you can see the little bit of a downdraft coming in. Beautiful little scalp play all the way down to the 20 moving average in the blue line, cutting through that down to the 50 moving average, then getting a little pop back to the blue line, then coming back, piercing this white trend line. Interestingly enough, that's a little bit of a double bottom area from here. Also, the white trend line was a major level from yesterday, and you never could confirm below that today. Here you open below it, but you closed, actually you opened above it, you closed right below it, but the next candle never confirmed, and that's the in-the-money stocks confirmation signal that everyone needs to truly understand. In-the-money stocks confirmation signal is one of the best signals out there to tell whether a market is breaking down or going to reverse to the upside, and again, it is proprietary information known just to in-the-money stocks subscribers of the Research Center and the Intraday Stock Chat, and obviously those that take the webinar. Now, sure enough, it doesn't confirm here. That tells you it's likely to reverse, goes to a double top, then it comes back beautifully. That's the shorting opportunity at the double top, comes back down, gets below the blue line, below the 50 moving average, but notice you do not confirm below the 50 or the white trend line right here, and then sure enough the market reverses, comes down, settles above, and then pops back up. Then right here you go to the blue line, consolidate in a bullish manner. This is an in spirit of bull flag pattern, another thing we teach in the webinars as well as in the Intraday Stock Chat and Research Center. In spirit of bull on top of 2 moving averages right here, that tells you most likely we'll see a pop back up. Sure enough, the market pops back up, and right now the SPY is trading down about 8 cents on the day. So the technicals continue to tell us everything. And again, these aren't just regular technicals, folks. I want to make that clear. This is in-the-money stocks proprietary technical analysis, stuff that we've developed that works basically 80 to 90% success rate. So much higher than all that other nonsense like stochastics, RSI, MACD, nonsense like that. This stuff officially works, and it's a beautiful thing, time-tested and tested back literally about 5-10 years since my partner and I developed these type of methodologies. And it's a beautiful thing to continue to make money year after year, regardless of the direction of the market. Now, going into a couple other things here on the charts. What are we looking looking for. There is a possibility, because volume is dying out. Notice the volume here. We've only done 134 million today, that you will see the markets continue to hold up today and possibly even move back to the highs of the day. That will be a possibility. Resistance will be at the high of the day right around 116.65. Excuse me, 117.65. And again, we've been in a dollar range. The low of the day happens to be 116.67. The high of the day, 117.68. So $1.01 overall in the distance of the variations between high and low today. But either way, the light volume here, you can see it continuing to inch lower. That generally tells me that the market will have a tough time sharply selling off. You could see a little bit of a pullback. That's always a possibility, but you just don't anticipate a large pullback overall. All right, and again, it could easily pop to the highs of the day. Resistance will be at that 117.65 level. If you should start to come down a little bit, this area of dual moving averages, where the 20 and the 50 are, that will be support. That's also the pivot from this point. That is at 117.15, and if you get through that, the white trend line, you have to watch this. Not necessarily whether or not it goes and closes below it or above it, but you want to see if it confirms below. If it closes below, can you get the in-the-money stocks confirmation proprietary signal to tell you that it's going to break lower? And again, obviously, you'll be watching double bottom right in here as a key level, and that's 116.85, and then possibly all the way down to this little tail at the 116.65 level on the way down. If you get through that, you're going to go down to this pivot from yesterday at 116.45 and so forth all the way down. 60-minute chart, we'll take a quick look at it. Sure enough, you can see ever since the gap up following that debacle a week ago now, and again, that was a week ago where we dropped 1,000 points and then rebounded back, and then we had the Friday, which basically ended flat to down, and then we got that big gap up on Monday, and then kind of sideways Tuesday, Wednesday, Thursday here. You can see that's exactly what's going on here. I mean, if you look at this, you could make a case that you're slowly floating sideways to up. Could be an overall in spirit of bear flag. But again, we'll continue to research it and put out our proprietary analysis to our premium members of the Research Center and the Intraday Stock Chat for all to understand and position themselves accordingly. And again, overall, we're still looking at the key plays here. Going to be putting out more and more alerts here coming in the coming days as we see setups for swing trades, both long and short, in this market. And again, that's the beauty of it. As short-term swing traders, you can go long, short multiple times a month and just position yourselves to maximize profits every which way of the market. If you're expecting a bounce like we were after this drop, and again, we talked about that, you can start looking for a couple longs. Then once it goes up to a certain level, you can start positioning yourselves to the short side. And again, just do it over and over. A good swing trader should make multiple hundreds of percentages a year in their portfolio. A good day trader should do 300-400%, in my opinion, even possibly more in their portfolio. An average investor, 10% a year. I mean, what would you rather do? You know what I'm saying? So again, it's very key to understand the rules that we teach, which are proprietary methods. And again, it's confirmation signal, even number signal. I mean, there's just countless ones we go over time and time again. And again, a lot can be learned in the webinar this weekend if you sign up at In the Money Stocks under Education Webinars and Seminars, or in the Intraday Stock Chat and Research Center. Now, just a couple stocks in motion here quickly I want to cover. Goldman Sachs, still weak on the day. Goldman is lower by about $1.43. It had a bounce back day yesterday, but again, one bounce back day just isn't cutting it here as it falls all the way back down. We'll continue to watch that. Research in Motion is lower. Amazon is flat to lower. JPM, another financial, is weak as well today. Google is having one of the bright spots of the day, up about $12.50. This stock has been pounded. If you take a look at the daily chart, I mean, ever since the January highs, it never really revisited those. And again, it's very, very, compared to a lot of other charts, very, very oversold. Now, some good calls from the day today. I talked about this yesterday in the nightly video to my premium subscribers and in the Intraday Stock Chat yesterday. I said, guys, Baidu split. It's going to get all the retail investors to jump on board. Once they jump on board after a day or two, you can look to short. It was added to the Bearish Pro Trader watch list today at $81+. Sure enough, trading at $77. That was a great call. Basically, $4 profit so far on that shorting opportunity. Now, how did I know that? Well, basically, the retail investor jumps on when it's a stock splits, retail investors jump on board because all of a sudden they look at it and say, oh, this is so cheap, I can afford it now. Instead of paying $750 per share on Baidu, now they can pay $775 or $70 per share. They're going to jump on board. Guess who's selling to them? Institutions. Once the retail investor buys after a couple days, then the institution sells. There's no one left to buy. The stock will come back down. That's exactly what's going on here with Baidu. Great call there. $4 already just today in the money on that play from the Pro Trader watch list. Other stocks from the Pro Trader watch list that are working perfectly. SanDisk made a new 52-week high today and sold off. Nailed that one as well, folks. A lot of people in the chat room took some good profits on the even number play. This is another proprietary level, even number play on SanDisk. By going through that 45 level, you knew it was going to be a shorting level. Bam, nailed it. And the stock is now trading at 43.70. Literally, we're talking $1.50 off the highs of the day on a beautiful even number play right there. All right, there are tons of calls like this going on constantly in the Intraday Stock Chat, in the Research Center. And again, we encourage you to join the webinar this weekend. Going to be a fun weekend. Good profits to come, guys. We'll talk to you soon. Take care.